Gold and silver is money. The people that control 80% of the wealth in the world today, they are the same people that own the world since the dawn of time.
Do you sometimes feel dazed and bewildered watching the silver and gold market? There is so much going on in the world right now, so many factors affecting the price of silver and gold. And then you throw in this prospect of CBDCs. What will that do to the value of our silver and gold? Let's get some unique perspective on this situation today when we sit down with Mr. John Lee. He's the CEO of Silver Elephant Mining, and he has a unique perspective that he's going to share with us right now. Enjoy the interview. When it comes to silver, the actual metal and the price, obviously the last couple of weeks we had what I call kind of bizarre price action a week ago, where the price was up almost $1 in the morning and then dropped by 7% in one day.
Yes.
And I joked around with a few people. I said, well, I guess inflation dropped 7% today. But I'd like to get your perspective on that, but I want to get your perspective on one other thing too. The common narrative that I hear out there is, oh, it's the strong dollar. It's the strong dollar. And I looked back 15 years ago, 2008, the DXY index, which is the common measure of the strength, quote unquote, of the dollar. The DXY was around 80. And today it sits around 108, which would represent, about a 30% increase in the strength of the dollar in the last 15 years. But I have a question for you, John. Why is it now, if I take a $100 bill here in the United States and I go to the grocery store, I would think that I would get 30% more groceries, but I get 50% of the groceries. Does that make sense? You hear this argument of a strong dollar, but in real terms, I would argue the dollar's not really. They're all losing value at the same time.
Absolutely, Ron. And I just came back US. I was just trying to. I think the stamp is like $1.05 or $1.20 for first class stamp. I can recall not so distant memory. It was 35 cents or 33 cents, not only 10 years ago. Sure. And you can also use the McDonald's index. Now a Big Mac meal costs you more than $10-20. And I remember I was in Europe in Amsterdam. I think I bought a Big Mac meal for almost 20 euros. Wow. What they're trying to do, Ron, is they try to, the power that be are distracting you, try to encapsulate you in this dollar arbitrage. So one day they're saying ECB is going to raise interest rate. The next day is the Fed is going to raise interest rate. So they're trying to keep you in this what I call the game of exchange of vouchers. And the real money, the vouchers are used for the peasants. The real money is gold and silver. Yeah. You're also right. Like, you don't have to look very far. The last time the dollar was $106 index, that was about a year ago. Silver was $18. So for these dollar bears and silver bears and silver despairs, that there is leakage and spillage of this speculative money into silver. And it's just that the governments and the power that be are actively discouraging the purchase of silver. So they're suppressing that through media, through the cartels, like you talked about. On a Friday afternoon, they will come out and sell 50 million ounces, 100 million of silver in the span of an hour. That would be equivalent to a quarter of or a tenth of silver production for the entire year. Yeah. And try to use the paper market to suppress to discourage the physical purchase of silver. So, over time, silver, despite of all that effort, has gone up from $4 to $22, and I think still very, very undervalued right now. We can talk about a lot of different metrics, from gold to silver ratio, from inflation, from supply and demand perspective, and all of that indicate I think silver should be close to $50 than it is at $20.
Yeah. I found it interesting that last Friday, where we had that 7% round trip move in silver, I read that 550 million electronic ounces of silver That's 2/3 of the world's annual production of silver. It was traded in like a 4-hour period. I mean, you can't tell me that's reflective of the real value of the metal.
Well, it's not, but same with oil. I mean, remember back in the financial the pandemic, oil went to negative, and I knew some oil trader that lost their shirt because they were longing at $10 and $5 and went to negative, and they got wiped out. This particular correction on Friday staging was is well engineered. You're dealing with very sophisticated traders that has unlimited margins, Ron. So you know who you're dealing with, and it was coinciding with the long national Chinese celebration because the physical buyer, by and large, are the Asian, the physical market in Asia. So what they try to do is they try to engineer a waterfall, a avalanche of crashing the silver, so that when the I think the Asian guys just come back trading. I think it was a long weekend. October 1st was China's national day, holiday for 2 or 3 weeks. So the guys are literally just waking up on Wednesday or Thursday. The major action I think is going to really actually happen on Monday because it's a long week, almost a long week holiday. So what they want to do is they want to have the Asia wake up. They want to whack the market and have the physical guy wake up in the morning and then have margin calls to inflict maximum damage, Ron. That's what they want to do. And subsequently, I think right now at $21 silver would be if you can swallow and absorb another 5 to 10% downside at the most, your upside is multiple is a lot more than what the downside represents right now.
Yeah, and I find it interesting. I talked to a number of people in the online bullion dealer community and even local coin shop community. Something is different this time, John, because they're all reporting, typically in the past, the behavior of the individual retail investors, especially in the US, would be to sell more when the price was going down. And it's interesting that they're reporting that sales, they're not saying it's as crazy as we had back in March, April during the banking crisis, but they are all telling me that they're seeing extremely robust uptick in silver demand with this recent downdraft in the price or suppression of the price that we had. At some point, right? And I guess you and I could talk for hours. It seems like, with everything going on in the world geopolitically and with the BRICS and their desire to kind of, establish new price discovery mechanisms for silver and gold, that we're going to see. And I think it's interesting, and I think way more about this than I do, but like the Shanghai Gold Exchange and the Shanghai Futures Exchange, those are more physical markets, and that eventually we could see the physical market overtake the electronic market.
Ron, for silver, just like all the other commodities, it's the investment demand that's going to drive the market. Same with cobalt, same with vanadium, same with gold, same with oil. It's not so much the industrial fundamentals that dictate the price action. It's always the speculative capital. And what's going to drive silver price higher within the speculative investment demand is not going to be your mom and pop retail buying coins. It's going to be driven by two major driving forces. One is central bank diversification. The Russians had their $350 billion confiscated. And United States has openly declared war with China, and Bloomberg had put out pieces say Xi Jinping is the greatest threat to mankind. You don't say something like that unless you're being instructed word for word on what to put out. And China has over close to $1 trillion of U.S. treasuries. So Saudis are not the best terms with the United States, and who's been meddling with affairs in the Middle East, and Saudi is and the United States is no longer the large oil buyer of Saudi's oil. So I think collectively you're looking at well over a couple of $1 trillion of central bank holdings are not the best friends of United States. And back in the 80s, it only took Charles de Gaulle of France, one country to put up the money on the best front door and demand $35 for an ounce of gold. That broke the gold window. And now you have collectively $2 trillion. Like if China were to attack Taiwan and and United States didn't do anything about it. You think the Japanese will be holding on to their $600 billion of U.S. treasuries? That's number one. It's the central bank diversification is going to put a major demand on silver. And the other one is the well-to-dos, because I cannot see a scenario where they will be living happily with the digital currency. Digital currency is going to be micro mandates in how you spend your money, where you spend money, what time you can spend money, and how you spend your money. Already, Ron, they're tracking your carbon spent. When I bought a ticket, United Airlines from Taipei to Toronto was 994 kilograms of carbon dioxide. And now there's discussion about per capita spend of carbon at 1 ton. So if you're going to take a transatlantic or Pacific flight, then you'll be eating tofu for the rest of the year. And the likes of Elon Musk is not going to put up with it. But there's no other choice. Countries like Australia already are removing ATM machines, and everything's going. Half the shops, a third of the shops in downtown Vancouver don't accept cash, and there's a lot of reels and clips in UK of shops doing the same thing. And before you know, the federal government is going to start issuing their federal salaries in digital currencies, and that's how, Ron, countries like Argentina and Brazil work. I was there. When the country's currency gets destroyed, the circulation of new currencies through the issuance of new money to government employees. So this digital currency is going to be rolled out the phase 1 by government issuing money to welfare, pension funds, Social Security, government employees, state employees. They're account for close to half of the employments in the United States. They're going to be digital currencies. And now all of a sudden, you cannot drive, if you have a 7-Eleven next to your home, you cannot drive 15 kilometers to Costco to buy a can of Coke. That is going to happen, Ron. It's in the cards. What will happen. And the Sentai billionaire, the billionaire, the Cox brothers, the Elon Musk, the Jeff Bezos, you can go down that ladder. There's no other way to go about it. The guys are not in the club. They just don't want to have to interfere or get their hands sort of into the politics. The only way to preserve their health and preserve their freedom is physical metals. And there is no other way, Ron. And that's why I told my people for the first time in 10 years, I started buying gold. And at 1850, and now gold is 1820. Never I thought it would go back to the 1820. Really presented a great opportunity. The rising dollar can only cap the metals for so long. It's already at 106. I think it's going to struggle to take out 110, which means you only have going to be another 2 to 3% to go. And gold and silver are known to front run ahead of the dollar's top. So you're looking at maybe another 2 to 4 weeks, and I would not be surprised as we're having this conversation that we're looking at the bottom of the market, which is $21 for gold and $21 for silver, $18.20 for gold.
Yeah. I heard somebody say the other day that silver and gold are the oldest markets in the world, right? Silver and gold have been traded for longer than anything else. And I thought, usually what comes with age is wisdom. So, as you, I'm sure people say silver and gold are anticipatory metals. They look out further into the future than anything else. And I think we could see a rebound sooner as opposed to later, because when you look at what's going on with the bank stocks right now, when you just look at the big picture of what's happening, I think gold and silver are going to start signaling to us that things aren't looking so great in the future. And I do believe that your company and Silver Elephant are going to be positioned to benefit from it. So I really appreciate you taking the time today, John, to talk with me. I want to mention to our viewers, the company's stock is traded in the U.S. under the symbol SILEF, and in Toronto, ELEF. And if people want to learn more about the company, they can go to the company website, reach out to investor relations. And I'm sure I forgot something here today. So, John, is there anything I missed or anything I forgot to ask you about?
Yes, gold and silver is money. The people that control 80% of the wealth in the world today. They are the same people that own the world since the dawn of time. And they are the ones that finance the world wars, and they're the Cecil Rose, and these are the Rockefeller and Rothschilds, and they're one of the same families. They own the most gold in the world, and they used to loan gold to make money, and then they got tired of it because the amount of gold and silver is finite. So they conjure up the idea of the Fed, of which they are printing behind the back, and through the disguise of a plunge protection team. And now, if you look at, Vanguard, BlackRock, and State Street collectively own 30 to 80% of the S&P 500. So I don't anticipate a crash in the equity market like the Robert Kiyosaki and the Peter Schiff of the world. I don't see that scenario, because so now the game is the same. Ron, what is different is that they have declared a showdown by 2030. And for these people that see the end game, which is digital currency, the voucher, sort of voucherization, digital vouchers of the fiat currencies, which really is it's a voucher system, that people that see the end game by 2030 is going to go back to gold and silver, because it is money. It's always been money. It's just been disguised and suppressed so that the guys that used to run this laundering show, the loan sharks are now much easier to loan which they can print. We're gonna see the showdown very soon, Ron. I do anticipate $28 level to be overcome within the next 4 to 6 months, because the central bank diversification, and because this digital currency mandate. I used to tweet a lot, Ron, and you can find me at Twitter. It's just search for Silver Elephant, John Lee. I do provide some technical analysis, but unfortunately, I just don't have so much time as I do in the past, which is, analytics are my passion. Unfortunately, you're running a silver mining company, and I look forward to provide further updates in due course with your audience. Ron?
Yeah, thank you, John. And I feel like you and I could talk for another hour. I was talking with Lynette Zhang to go along with I love your voucher analogy, but I mean, it blows my mind that I can trade this paper for real metal, right? and the other thing I want to circle back to, you said about with the CBDCs, because I get that question all the time from my community, like, what's going to happen to silver and gold if we go to the CBDC? And what I like to propose is, what else will you have available for any form of financial privacy once because cash, they get rid of cash, like you said. Half the stores I go to now don't take cash anymore. If cash is no longer valuable, what in your phone is your money. If you want to have any form of privacy, what's the last safe harbor? And to me, that is silver and gold.
Who is watching the watchman, right, Ron? Who is watching somebody's watching the Fed, because somebody's telling the Fed what to do. The same people used to say interest is going to stay low indefinitely, now saying that interest rates are right now. Interest need to stay, higher in the indefinite future. And the showdown's going to happen before 2030, and we're going to see very soon what's going to transpire, Ron.
and I like to tell people, why would you believe what the Fed is telling us? Because 2 years ago, inflation was transitory, inflation was temporary, inflation wasn't a problem. But even more offensive was the fact that like 2 years, maybe 2 years and 3 months ago right now, they were saying they weren't going to raise interest rates until the end of 2023, which is right now. And we've just gone through the fastest rate hike cycle in the history of the country.
There's more to come, Ron. I've telegraphed it when 10 years below 2% 2 years ago. I said it's going to go to 4%, and now we're at nearly 5%. The only way, Ron, to create demand for fiats, or what we refer to as vouchers, is to have people borrow. And that's why it was deliberate attempt in the last 10 years to create nonsensical ultra low interest rate to get people hooked on debt. And now it's come, now the game has come to roost. they are going to exert maximum pressure to bankrupt, make the middle class disappear, to make it a two-tier system. So this is all by design, Ron. Yep. This is all by design. Look at it. Another way to look at it, from 2010 to 2014, the Fed had interest rate, Fed spreads below 1% for almost 5 years. And when oil is between 80 to 120. Look at today, oil is 80 to 120, and yet the rates are near 10-year high. How do you explain that? It cannot be explained. It's it is a orchestrated, concerted by these efforts by design. Unfortunately, they're going to continue to exert pressure, continue to hike interest rates, which are not data driven. The data that being produced are the same. I'm talking the CPI, the CPI numbers that the Fed are running, right hand to the left hand. You have a Jamie Dimon on one hand talking about, risk going to go 7, and you got other guys that say they're going to create attention to keep people second guessing while they turn up the temperature, and it's not going to be
like boiling a frog in water or distraction or anything else. John, this has been great. Can we talk again sometime in the future?
Absolutely. I hope to update you, the shareholders, your audience, maybe early in the new year on how we're doing with our production and the further plans for our mine going forward, and maybe a bit more update on the markets.
That sounds great. And on behalf of everyone who's joining us right now and the people from my community, thank you, John, and we will talk to you soon.
Stay in touch. Thank you for your time.